Very good evening, everyone. Welcome to this class. So, as you have seen the thumbnail, we are going to discuss the Banking Laws Amendment Bill, most important changes which have been introduced, right? So, recently in the current affairs classes also, I have discussed this thing, but specifically, we are taking the entire news and whatever changes have been proposed will be discussed. Top 7 changes are there in this class, and after this class we'll not have to go anywhere else for the changes proposed in the Banking Laws Amendment Bill 2024, right? So stay tuned and rest assured everything will be covered. So Banking Laws Amendment Bill 2024, if you see in the first slide, it was introduced in Lok Sabha on August 9, 2024, and then it was passed in Lok Sabha recently on 3rd December 2024. Okay, so it has been passed in Lok Sabha as well, although it has not become an act yet, but it is a bill passed by Lok Sabha. So remember, this is the status quo as of now. Now, if we talk about what changes does this bill proposes, so it proposes changes. This amendment, basically Banking Laws Amendment Bill, proposes to amend which all acts. So this can also be a probable area of question. And also please remember, this class is going to be important for all the upcoming examination, be it any banking examination, regulatory body examination, right? So this is very, very significant. And these kind of changes, they do not happen every then and now, right? So that's why you should make a separate note of this. And this class is going to be a very important preparation. So please stay focused. First thing, as I'm telling you, what all laws or what all existing laws are going to be amended under this. This can be a separate question. So remember, it is going to amend, or it is there to amend the RBI Act 1934, the Reserve Bank of India Act 1934 first, okay, RBI Act. Then the Banking Regulation Act 1949, second one. Banking Regulation Act 1949. Then the State Bank of India Act 1955, State Bank of India Act 1955. Then the Banking Companies Acquisition and Transfer of Undertakings Act 1970. And then the Banking Companies Acquisition and Transfer of Undertakings Act 1980. So all these existing acts, they are to be amended by the Banking Laws Amendment Bill 2024. I hope this portion is clear, everyone. So please remember. Now, since it is going to amend a wide range of acts, some new provisions have been introduced. So now we will be covering whatever is changed, okay? And that is going to be very important. Every change is a probable question for you in the upcoming examination. So first, what has changed me? First in the series is the definition of fortnight for cash reserves. Now what happens is, you know that the commercial banks, the scheduled commercial banks and the non-scheduled commercial banks, they have to maintain certain reserves with the central bank and with themselves. Now, since we are talking about the reserves maintained by these scheduled and non-scheduled banks with the central bank or the RBI, so effectively it is CRR. You know what is it, right? CRR, cash reserve ratio, which is the proportion or percentage of NDTL which the bank has to maintain in terms of cash with the central bank, right? NDTL is net demand and time liabilities, which is basically the total of deposits, whatever kind of deposits a bank has. This include net of demand and time liabilities. Demand deposits, because liability, see, your deposit with the bank is liability for them, okay, and the loan provided by the bank is an asset for them. That's why we call it liability. So net demand and time liabilities ka certain percentage they have to keep in cash, which is known as CRR, cash reserve ratio. Remember this. And if you remember, in the recent monetary policy committee class, I have explained you that CRR has been reduced by 50 basis points, okay. So now it tends to be how much? 4% of the NDTL. After the recent monetary policy committee meeting, which has been discussed, we have discussed in detail. So now it is 4%. Now, since they have to maintain these reserves like CRR, etc., other balances, they, on what basis do they calculate it, right? So they have to maintain these reserves. Yes. Accordingly, there is use of this word fortnight very frequently in RBI Act, in Banking Regulation Act 1949, etc. Right? So this definition has been changed for such cash reserves. Cash reserves ke liye I have explained you CRR. I hope it is clear. So under the RBI Act, the scheduled banks, they have to maintain CRR with the RBI, which is based on the average of balances held by banks at the closing of each business day or closing of business day of each day of a fortnight. So basically these balances are, say, calculated on the basis of whatever your balance was on the closing of business of each day of your fortnight, right? Each day of a fortnight. So earlier, this fortnight used to have a different definition. Now the definition has been changed. Earlier, the fortnight was, say, Saturday, say they started counting Saturday, then next Saturday, and then next Friday. So Saturday to 1 week, and then the next week ka Friday. So 14 days period effectively, right? Used to be the fortnight. Now they are going to change it. They are not going to fix it on Saturday or Friday or Sunday. No, they are saying that there will be two windows effectively, right? So first day and the last day from the 15th day of the month. I'm going to tell you. So I hope it is clear that this definition of fortnight is going to change. Presently, what is the definition? And then we will look at the change. Presently, if you see the fortnight, ड्यूरिंग द फोर्टनाइट ईच डे का जो क्लोजिंग डे होता था, क्लोजिंग ऑफ द बिजनेस ऑफ ईच डे, दे calculate the average of the balances. So fortnight is at present defined as period from Saturday to the second following Friday, including these both days. So starting from Saturday, suppose today is the Saturday, right? So today is actually Saturday, है ना? So Saturday से they started, including today, till the next Friday or the second following Friday in the next to next week. This used to be the fortnight window. I hope it is clear. Tell me, everyone, including today Saturday and that Friday, right? This used to be, or this is the present fortnight as we call it, for calculating the balances and these things. Is it clear? Tell me, yes or no? Present calculation of the fortnight, Saturday to second Friday, right? 14 days period, you know a fortnight is. So now what is the change? The proposed changes, the bill changes the definition of fortnight to the period from first day to 15th day of each month. So now they are not affixing fortnight to any specific day. They are making it monthly. It will be more effective in calculating the balances held by the banks, right? So now they are going to make this fortnight, 2 fortnight weeks will be there, or 2 fortnight window, sorry, will be there, first day to 15th day of each month, or so either this one or 16th day to the last day of each month. This can be taken as a fortnight period, either from the first day of the month to the 15th day. So 15 day ka window, and then if not this one, then right from 16th day to the end of the month. So directly making it monthly, right? Not a specific days in a week. This is going to be more transparent, more easy to adhere to, and more efficient enough for the banking system as well. I hope it is clear, right? So this is the change. Remember, earlier what was the thing? Saturday to next Friday, including Saturdays and Fridays. Now 1st to 15th or 16th to the end. Clear? Then one very important thing is it also changes this definition under the Banking Regulation Act 1949. Why? Why both separate acts they are changing this definition? So this has been changed in RBI Act 1934, that's okay. But then why separately in the Banking Regulation Act 1949? Because RBI Act 1934 calls the scheduled commercial banks. What are these scheduled banks which are mentioned in schedule? Tell me quickly, anyone. Which schedule of RBI Act 1934 do we, those banks which are mentioned in that particular schedule, we call them as scheduled commercial banks. Tell me the schedule. Which schedule of the RBI Act 1934? I will be waiting in the comment section, right? So, but what about the non-scheduled one? So they are required to maintain these cash reserves under the Banking Regulation Act. That's why this has also been changed under the Banking Regulation Act also. So that's why both of these acts have been changed. So please remember, it also changes this definition under the Banking Regulation Act, where non-scheduled banks are required to maintain cash reserves. Hence now, yes, very good. All right, second schedule, right? Second schedule of RBI Act 1934, you have the scheduled banks. And the non-scheduled ones, they are required to maintain such cash reserves under the Banking Regulation Act. That's why both of them, they have witnessed change of this definition of the fortnight. Effectively now what will happen is reporting dates for banks for any such regulatory compliance. If you have to maintain any balance fortnightly, if you have to report to the central bank or RBI fortnightly, any regulatory compliance which is mandating you to report on a particular day or say fortnightly, now it will happen. So the reporting dates for the banks for regulatory compliance will be 15th and the last day of every month, instead second and fourth Fridays. Now is it clear? So now the reporting dates will be 15th day of the month or the last day of the month. Clear? Earlier there was a lot of confusion and a lot of intricacy was involved, like second Friday, last Friday. So now it is done away with. I hope it is clear, right? It is going to be either 15th day or the last day of the month. This is the first change. I hope you all have understood this thing. Now moving on to the second important change which has been introduced. This is tenure of directors of the cooperative banks. Write this down separately, right? So tenure of directors of the cooperative banks. The Banking Regulation Act, if you see, it prohibits director of a bank except the chairman and whole-time director to hold office for more than 8 years consecutively. Originally, if you look at why this has been amended, the Banking Regulation Act, also remember for which provision, which act has been amended. Are you getting my point? Not all provisions are mentioned in RBI Act, or not all provisions are mentioned in Banking Regulation Act. So remember them respectively. Because the original Banking Regulation Act 1949, it does not provide for the director of a bank except the chairman and whole-time director for simultaneously or consecutively holding the office more than 8 years. It did not allow. So after this amendment, this has been raised. Now 8 years, say it has been increased to 10 years. Okay, remember this. It has been increased to 10 years. So now these directors of the cooperative banks I'm talking about, not the commercial banks, right? Please remember, we are talking about the cooperative banks here. So for the cooperative banks directors, the tenure can be extended consecutively up to 10 years. This is the amendment. All right. So this has been increased 8 to 10 years. Remember this. See, if 15th day is Sunday, then what will be the reporting date? Now here, you see, that's why the specific day requirement has been done away with, right? So if it is Sunday and the suppose the next fortnight day, the last day of the month is not a Sunday, you can report. Or accordingly, when it gets implemented, we will get more details. If Sunday falls, will it be considered for reporting or not? When it becomes an act and becomes implemented, more of such details will be out. So far, this much has been provided, that this is the change they are introducing. How does it gets implemented will be further followed upon. Are you getting my point? Right? So you have two things, na? First day or the last one. Now suppose Sunday falls. So when it gets implemented, it will be clear कि if there is Sunday, will it be counted for reporting or not? As usual. That is something we will look into as and when such details are out, because this is just whatever has been proposed as of now. Clear? Once it is rolled out, all these things will be clarified. So, second one, we have discussed the tenure of the directors of the cooperative banks. I hope it is clear. Right? Now, moving on to the third important change which they have introduced. This is also regarding cooperative bank. So, you see prohibition on common directions in case of cooperative banks. Exemption extension. This is exemption extension. What is exemption extension here? The provision says that the Banking Regulation Act prohibits a director on such cooperative bank's board to serve on the board of another bank. If you are a director of a cooperative bank, you cannot, suppose you are a director of a central cooperative bank, you, according to this Banking Regulation Act, cannot serve on the board of state cooperative bank. This was the provision. Now this has been amended for what? But this is exempted. Where exempted? So the bill extends this exemption because it does not apply to directors appointed by RBI. Now remember, this provision, it does not apply to directors, such directors appointed by RBI. Now this has been extended, and the bill extends this exemption to the director of a central cooperative bank. Effectively, a director of a central cooperative bank can serve on the board of a state cooperative bank. This is the catch from here. Are you getting my point? So originally Banking Regulation Act does not provide that if you are a director working on board of one bank, you cannot work on the other, right? This is the thing. But it does not apply. This provision does not apply to directors appointed by RBI. So this is one exemption. Hence this exemption has been extended via this amendment to cooperative bank directors. Now, if you are a director on board of a, say, central cooperative bank, you can also serve a state cooperative bank as a director. Okay, so a director of a central cooperative bank can now serve on the board of a state cooperative bank. I hope it is clear, everyone. This is another important change. Just remember this one, ki center ka now can also serve in the state, the director of a central cooperative bank. Fourth one is substantial interest in the company. So earlier, under this Banking Regulation Act, substantial interest, what was the definition of substantial interest? See, when you have this substantial interest in a company, you get the dividend and profits accordingly, right? So this definition has been extended. Under the Banking Regulation Act, substantial interest in a company earlier used to refer to holding shares of over 5 lakh rupees. So when did we call that a person has substantial interest or an entity has substantial interest in a company? Earlier, if you are holding shares of over 5 lakh rupees, or you are holding 10% of the paid up capital of the company or provided, right? So either it is shares of over 5 lakh rupees or values up to 10% of the paid up of capital of the company, whichever is less. Remember, whichever is less by any individual's spouse or minor child, or either individually or collectively, whichever manner. If you are holding shares of over 5 lakh rupees or 10% of the paid up capital of the company, that used to be known as the substantial interest. In that case, we used to call it as substantial interest in a company. Now what is the change? The bill basically amends this and it increases the threshold to 2 crore rupees. Okay. You have to have at least this much amount of shareholding. How many? 2 crore. 2 crores. So please remember, now this 5 lakh rupee or 10%, you don't have to do anything with that. You will be referred to as having a substantial interest in a company if you are having at least 2 crore of amount or 2 crore worth rupees of shareholding in the company, right? So please remember this 2 crores. 2 crores. Although later it can be changed by the government. So this is the alteration of criteria or threshold for substantial interest. I hope it is clear. Remember, it is now 2 crore, 2 CR. Next one, nominee for the account holder. So earlier you used to have only one nominee, right? Now what is the case is, nominee for account holder mein, Banking Regulation Act allows single or joint deposit holders to appoint a nominee for their deposit, right? Now the bill allows the appointment up to 4 nominees for these purposes. If you are an account holder, you can have nominees for up to 4 nominees you can have now. Why this has been done? It has some reason behind it, right? It is not coming out of nowhere. So you see, and what do they do with this nominee etc provisions? Suppose you are an account holder or a person A is there, person A is an account holder. Due to any unforeseen reason, the account holder dies, right? So where that deposit or any amount which has been deposited in account of this person A will go to the nominee, whatever, whichever nominee, whomsoever he or she has appointed, right? This is the purpose. Now what happened during the corona pandemic is, suppose this person A died of pandemic, right? It appointed person B as the nominee before the corona. Then the person B also died of, say, pandemic, unfortunately. Are you getting my point? Both of them died of pandemic. Now what to do with such unclaimed deposits? So it become a real hassle for the banking administration and the banking sector. There was a lot of legal issues arising then, lot of discrepancies were there. So to clear up all these things and to align all these things, to reduce the legalities pendency of such cases, this has been increased up to 4 nominees you can have, so that even if some of them unfortunately die, you already have other ones listed clearly. It will not make you entangle into legal issues. Are you getting my point? So this was the broader reason. So please remember this fact. Now you can have 4 nominees. But what is to be kept in mind here is that for deposits, normal deposits basically, such nominees can be appointed either successively or simultaneously. है ना? Suppose you have deposits in the bank, so you can appoint the nominee successively or simultaneously. What is the difference between appointing a nominee successively or simultaneously? See, let me explain this thing. So just remember that deposits etc के लिए you can appoint nominees either successively or simultaneously. But for say locker purpose, you are having a locker in a bank, you can only in that case appoint the nominee successively. Okay. For other purposes like locker etc, the nominee can only be appointed successively. So what is the difference? Let's see. Now suppose this person A is there and person A appoints 4 nominees. Okay, in this manner कि मेरा जो भी total deposit है, this is my total deposit. Out of this, 20% has to go to this nominee, 40% has to go to this nominee, or say 20, 40, 60. Then 30% has to go to this nominee, and then 10% has to go to this nominee. So this is given out in a proportion. Person A has appointed 4 nominees and specified that how much proportion of my deposits in case of something happens to me will be going out to these nominees. This is proportionate, right? Proportionate distribution. So this is what we call as simultaneous appointment of nominee. Are you getting my point, everyone? This proportion based case, इतना इसका fix है ना? This is simultaneous appointment of nominee. Everyone, is it clear? Simultaneous appointment. Now the other one, what is successive appointment? Successive is, say 4 nominees the person A has appointed and says, this will be the first one, say this person will be the first one, okay? If something happens to this person as well, then you go to the second one, then you go to the third one, then you go to the fourth one. So priority has been attached. This is not a fixed proportion. That means if this person is there, they will not be getting something. Suppose you have a locker and you have appointed successive nominees. First nominee can access that locker. If first nominee is not available, say first nominee also dies due to something, second nominee in that case will be approached. If something happens to second nominee, third nominee in that case will be approached. So this is successive appointment of nominees. है ना? So that bank knows if something happens to this person, I have to approach this one. This is the difference between simultaneous, the proportionate one, and the successive appointment of nominees. I hope it is clear. So coming back to the discussion which we were having, that you can appoint such nominees. For deposits, generally you can appoint in any manner, but then for locker, you only appoint successive nominees. So now you can appoint up to 4 nominees. Then next, settlement of unclaimed deposits. So you see, lot of unclaimed deposits have been there. Unclaimed deposits, no one has claimed the amount so far. Suppose account holder has not been there, right? Something happened to the account holder. Now what about the deposit? What about the amount deposited? So lot of unclaimed deposits were rising. Now the State Bank of India Act, SBI Act, remember SBI Act, then your Banking Companies Act 1970 and 1980, they provide for transferring such unpaid or unclaimed dividend to an unpaid dividend account. Suppose you are holding an account and some profit, some dividend, the distributed profit, dividend is share of profit which you receive, right? Suppose dividend is accruing into your account, there is this amount deposited and you are receiving something. What happens if no one has claimed that amount for so many years? Where it will go? So the SBI Act, the Banking Companies Act, both 1917, 1980, they provide that this to be transferred into an account properly dedicated for this purpose, which is unpaid dividend account. Okay, it will be transferred and then can be accessed. Now, if the money in that account remains unpaid or unclaimed for 7 years, it will be transferred to the Investor Education and Protection Fund. First, you transferred this to the unclaimed deposit account. Even after transferring it to the unclaimed deposit account, no one claims it continuously for 7 years, then you transfer it to the Investor Education and Protection Fund. Okay, this was the existing provision. Now what the amendment does is, the amendment bill, it widens the ambit of the funds, such unclaimed funds that can be transferred to the IEPF, that can be transferred to this fund, and then it can be accessed by someone, the legal hire, for example. Okay, now what all can be transferred to this fund apart from these deposits and dividends? First, shares for which dividend has not been paid or claimed for 7 consecutive years. Suppose you have invested into some shares, the dividend which you received on those shares, it has accumulated for 7 years, no one has claimed it. That can also now be transferred to this fund, Investor Education and Protection Fund. First thing, okay. Second thing, any interest or redemption amount for bonds which is unpaid, unclaimed for 7 years. Any bond, any share, you received some dividend, some interest on a share, on a bond. If it is unclaimed for 7 years, it is also going to be transferred to this account. Remember, Investor Education and Protection Fund. Earlier, only the deposits and their dividends used to be transferred, But now any accruing interest or dividend on the shares, any redemption amount or interest on bond, all these will also be transferred to IEPF. This is the change. That's why the amendment has widened this scope of transferring such unclaimed funds to IEPF. Then from this it can be accessed by the legal heirs or say successors. I hope it is clear. So this is to clear off all these unclaimed deposits from the banking system. Right? Then the next one which we have is the remuneration of auditors. Remuneration of auditors. It has also been amended. At present, the remuneration paid to auditors of the banks, whosoever are involved in auditing the banks, right? The auditors' remuneration, whatever has to be paid to them, it was decided or it is fixed by RBI in consultation with the central government. So at present, what is the provision? Any bank, you have auditors for the bank who do the auditing and all. Their remuneration is decided by RBI in consultation with the government. Now, what the bill does is, or changes is, it empowers the banks themselves. It empowers the banks themselves to decide such remuneration of their auditors. So this is going to be given, this power is going to be given to banks to decide this remuneration for their auditors. So more, you see, incentivizing it would be for auditors as well and for banks as well, right? An auditing process would be more efficient and transparent enough. They will not have to depend on RBI's and government's decided remuneration. So this is again another important change. Remember, remuneration of the auditors now will be decided by the bank itself. This is the change. So these 7 were the top changes we have seen. We have seen that so summing up them in just few words, 7th change which we have discussed, remuneration of the auditors will be decided now by the bank themselves. Settlement of unclaimed deposits, now such unclaimed funds or deposits like in the form of any interest on the bond, dividend on the share, etc. will also be transferred to this amount which can be further accessed by legal heirs, right? Nominee up to 4 you can appoint for individual or joint account holders. Substantial interest will be referred, your shareholding has to be at least 2 crores in a company. That will be called a substantial interest. Directors of the cooperative bank can also serve on the board of a state cooperative bank. Central cooperative bank directors can also serve on the board of a state cooperative bank. Tenure of directors of cooperative banks increased to 10 years consecutively, okay, from 8 years. And the change in the definition of fortnight. So first day of the month either or last day of the month, basically. Okay. So this is the thing. I hope it is clear. All the important changes we have discussed. If you have any doubts from the class, you can always ask me. I'm waiting for any questions if you have. Otherwise, the class is over. These are the important changes. Please note them down separately. It is your one-time preparation for all the upcoming examinations, right? Paid up capital, is the initial capital raised by the company via the shareholders, okay? The initial capital which is invested in a company, the initial capital raised by a company is the paid up equity capital. Anything else which we have? So please remember these 7 changes. Also, concepts I have discussed, all of these concepts I have discussed with you. CRR, like paid up capital, the fortnight, right? So I hope all of this is clear. Thank you so much for staying tuned. And that is it for this class. I'll see you in some next sessions. Till then, have a great day. Thank you.